Good morning and welcome to the Money Control live stream. You're watching markets with Santo and CJ. Well, it's a Friday, but there is no yay on this Friday for the market, Santo. If you look at the setup for today, it's extremely weak on the back of some very significant moves happening in the US market overnight. If you look at the SGX Nifty, it's indicating more than a 100-point cut at this point of time for our benchmark indices. Wall Street saw deep cuts on the back of, again, another print of very strong economic data, which is basically suggesting the Fed has to continue to raise rates because the economy at this point of time does not seem to be slowing down. But on the contrary, Federal Express, one of the giants of logistics across the world, they saw their stock plummet to record depths after the company withdraw its guidance as well as missed out on its earnings, basically spooking everyone that the global economy is actually slowing down. So yes, it's a tug of war between what the central banks are thinking and what the actual ground realities are at this point of time, Santo.
No doubt, and also back home, clearly 2 consecutive days of FI selling would have made bulls a little nervous. Retail is still out there in full flow, and we are seeing relatively better strength in mid and small cap stocks. But that said,
we try to support you guys.
Oh yes, of course. But there's also a thin line between being brave and being foolish. And as I said yesterday when we were having that debate about which is smart money, institution or retail, I'd still go by.
We shall see, my friend.
Definitely. So the general feeling here is that probably we are still in 2021, and you just need to keep buying all the dips. So there's cause for some concern. But that still said, CJ, at this point in time, it's very hard to see any big triggers for a sharp downside from these levels. Yes, RBI is most likely going to hike rates, given that inflation has been on an uptrend, but to a large extent that's been discounted. Much will depend, CJ, I think, this time's earnings, the second quarter earnings, and that's where I think probably we could see some kind of a decisive move, because if the numbers again don't match up to expectations, probably then market will seriously have to think about the high P multiple that they're giving right now.
I think, Santo, earnings clearly are the one glue that is holding this all together. I think if you talk to anybody, they all of course mention the macro challenges, the tightening of financial conditions, not only abroad but at home also. If you look at Chris's own financial condition index, that has tightened to the highest level in 2.5 years, 3 years. So clearly, even at home, it seems liquidity is drying up a little bit. But they say that earnings picture still remains so strong that there is no reason why you would want to sell out on your stock at this point of time. And I think that is the only thing that is keeping the bulls going. And I think going ahead, if the September quarter's results also deliver, then probably bulls will march on and bears will have to take a beating in that sense.
Well, there's also something known as the risk-reward trade-off, CJ. And how much risk are you willing to take, and how much return do you see the market giving in the short term from these levels? That's a critical question.
Santo, here also narrative is very important. Since we have been listening since the beginning of 2021 that this bull market may be a little different from the past bull market, because everybody has been comparing it to the 2003, 2008. And therefore, in the psyche of a lot of people, they feel that I don't want to miss out on a 5-year run, right? Because the next 6 months are a little volatile for me. And I think that is why you see that in this market, a lot of people, including HNIs, who are also, can be considered smart money, are willing to buy the dip in this market.
Well, I would say that markets don't always move up in a straight line. So even the 5-year bull run, which you're referring to, 2003 to 2008, in 2006 you'd seen a serious correction. In 2004 you had seen a serious correction. 2005, each year you've seen some really sharp down moves.
And I think that is part and parcel of being invested in the market. That said, today in our buzz, the stocks that are on our radar, banking stocks are clearly there, and Santo really has been batting for the banking space for a long time. Of course, things are looking up for the sector. If you look at credit offtake numbers, if you look at balance sheet strength, if you look at the capital that a lot of banks are sitting with, especially the bigger banks, everything is a green tick at this point of time, and nobody can really find a chink in the armor, Santo. And you have a few stocks that you want to talk about.
Well, starting with Karur Vaisha Bank, this stock has been one of the spectacular performers in the last 2 or 3 months, and among small cap banks, this has been the clear outperformer. The stock price has almost doubled in less than 3 months, and this is a stock which the market had almost written off for dead. But after the first quarter numbers, you're definitely seeing a big change in sentiment there. There's also one of the stocks that Money Control Pro team has been advocating very strongly. Now, key triggers, key factors here in favor of the stock at this point in time: asset quality, loan growth, and cash at deposit, return on assets, all are clearly on the mend. The bank's retail, the deposit base right now is almost coming from 92% of it is coming from retail investors, retail depositors. That's a very good sign. Also, its return on asset is now at 1% after a very long time, and the general view is that it can still do better even from these levels. Now, this also been one of the stocks which was a favorite of the late Rakesh Jhunjhunwala. He had mentioned that while many other stocks had made him money, this was one stock that he was really very emotional about. And the guidance for this year given by the bank is also pretty strong. It expects a 15% growth in advances for this year. And while the restructured book is a bit of a concern at this point of time, close to about 1,525 odd crores. However, the bank has made 11% provisions for that, so that is still not much of a concern. So most of the things going in favor of Karur Vaisha Bank at this point in time.
Well, Santo, fundamentally speaking, clearly as you have stated out the facts in front of us, it seems like there's a lot going for the bank. But from a very short-term perspective, if you're looking at from, if you're wanting to make a decision whether I should enter right now or not, I think a couple of things on the technical side that probably people should keep in mind. A, it seems like the stock is a little overbought, not actually little, extremely overbought. If you look at the daily RSI, it's currently above the 80-82 level, which is generally a region where you tend to see a bit of profit booking or some bit of pullback happening in the stock. So from that perspective alone, I would be a little cautious, at least in the coming few weeks, as to how the stock performs. Especially, you could see a melt up in anticipation of very strong earning in the September quarter, or you could see a bit of profit booking because after the earnings, the stock really shot up, given the sort of commentary and numbers that the company, the lender had provided. So from a technical perspective, it looks, things are looking a little cautious, but fundamentally, clearly the picture is very bright as far as Karur Vaisha Bank is concerned. Well, the next stock on my radar today is Mta Tech, and this stock I firmly believe would be on a lot of people's radar today because the company has won an order, a clean energy order, basically related to the nuclear energy space of worth almost 540 crore, which is actually higher than the annual revenues in that sense, Santo. And clearly, this order inflow that has come in will provide a very, very strong visibility as far as revenue generation is concerned in the coming quarters and years. Overall, also, MTAR's story has been very spectacular. It is involved in the space, sector, is involved in the clean energy sector, and also it is also a play on the defense space as well. Almost 20% of the revenues do come from the defense space. The company's management, who was recently on CNBC, they had indicated that they're expecting that space also to kick in and provide a good support to revenues going ahead. So for me, I think this is one stock that investors would probably keep their eye on. Stock is down almost 34% from its 52-week high. So clearly, valuations are at this point of time may not be that much of a concern. The risk reward, in my point of view, seems quite favorable.
Well, MTAR is a good play on the defense indigenization theme very clearly, and you saw a lot of excitement around the stock last year, much of it which has now been tempered down. Now, you referred to the big order in the clean energy space. Now, despite that big order, when you're not seeing much of a reaction to the stock price, which to me indicates that maybe a lot of it has already been factored in. So that in itself may not necessarily be the trigger, at least in the near term. Once again, the stock is now beginning to inch up after that hammering it had taken from its highs, close to about 33% gain in the last 3 months, definitely. My concern here is that given the nature of the clients, it largely caters to the PSU companies, which is why you're also seeing that the receivables in this case seems to be pretty high. That's one concern that I have. Also, there's an increase in working capital days as well. Now, these couple of factors could be one of the reasons why investors are a little cautious towards the stock at this point in time. And lastly, let's not forget the promoters also trimmed stake a bit recently. While the stake was picked up by domestic institutional investors, the promoters cutting back stake at this point in time also might make a section of investors slightly cautious.
Well, I think, Santo, all those points are really good, and especially with respect to the delay you tend to see with billing cycles because you're involved with PSUs. But I think in general, if you look at the longer term picture for MTAR, clearly this is a very unique play within the Indian listed market because there is hardly any other company like MTAR at this point of time in the listed space. And I think probably that is why the company enjoys a little bit of a premium, the scarcity premium that a lot of people talk about. Once upon a time, Jubilant Foods used to enjoy that as well. I think that is why probably one would expect that those premium valuations will continue going ahead.
Well, next stock on our watch list this morning, ICICI Bank, again clear outperformer among the large cap banks. Now, banking stocks in general have been on a tear over the last couple of months, and ICICI Bank has been the best performer. In fact, there's been chatter for quite some time now that ICICI Bank is now going to be the next HDFC Bank, or what HDFC Bank used to be.
Wasn't ICICI Bank what it was, and then HDFC was supposed to be the next ICICI Bank, and now ICICI Bank is...
you've seen that in the tech sector as well,
yes,
CJ.
Yes. The bellwether keeps changing.
It keeps changing. Yeah. Once upon a time it was Infosys for a long time, then TCS took over, then Infosys. It all comes down to valuation. So, but many things at this point in time working very well for ICICI Bank, and you've also got many brokerages which are bullish on the stock at this point in time. CLSA, Morgan Stanley and Credit Suisse are some of the brokerages which are bullish on ICICI Bank, and the first quarter numbers were pretty strong, and since then there's been no looking back. And according to Credit Suisse Bank, net interest margins of ICICI Bank could improve by another, it has room for improvement of another 15 basis points from these levels. Also look at the growth in its advances in the first quarter, pretty robust and across all segments. So this is clearly a stock to keep an eye out for in the near term.
Well, Santo, clearly, I mean, if you look at ICICI Bank, if you have not participated, you clearly get that feeling of, of FOMO. But for me, I think ICICI has just become too much of a consensus trade. I mean, probably one of the few stocks in the entire Nifty pack which does not have a single sell rating on itself at this point of time. In fact, the amount of buy calls it has is closer to 98 to 99% at this point of time. So clearly it shows that ICICI Bank at this point of time is probably the most overcrowded trade in the market, and generally market is not really kind to overcrowded trades over a period of time. So I would expect that there would be certain times or periods within this journey of ICICI Bank to become the next HDFC Bank, wherein you will see sharp bouts of profit taking. Technically also, if you look at it, if you look at some of the momentum indicators, they are also sitting above, the overbought zone in some cases, especially the RSI indicator, which is basically suggesting to you that a pullback probably is in the offer in the near term. And overall, I think despite all of this, one has to say that it will still remain a top pick in the sector for a lot of analysts and investors out there, because the growth trajectory at this point of time is just too strong to ignore for the market. Well, the last stock on my radar today is Jubilant Foods from the QSR space, and this is one stock, which really caught everybody's attention after the first quarter earnings, Santo. Before the first quarter earnings, there were a lot of concerns about inflation, whether margins will take a hit or not, and whether footfalls will come back or not with the reopening of the economy. But clearly, the first quarter earnings showed that Jubilant still remains, Jubilant. It is still that dominant player in the QSR space. Their same-store sales growth was so strong. Margins were very, very resilient in that quarter. And clearly, with the easing of a lot of input prices that we have seen sequentially on a sequential basis, you would expect that this momentum in earnings will continue in the September quarter as well. Also, we have entered the festive period, which generally tends to be very good for QSRs, because a lot of people are going out. They're going out to, for festivals, they're going out to shop, and therefore you would expect that footfalls will tend to be very, very high for a QSR like Jubilant Foods. So for me, I think this is one stock to really keep an eye out on. Yes, valuations may be a little punchy in the short term, but if you look at the long-term story, clearly this remains a preferred pick.
Well, I think it's hard to argue at this point in time. Almost a near 50% rally, a little over 40% rally in the last 4 months, and the first quarter numbers really surprised. I think stock may pause for a breather at this point, and the second quarter numbers is something to watch out for. Well, with that, let's quickly take a look at the market. As expected, a bearish start here. Nifty down by about 70 points in early trades. 1,000 stocks are still up and 761 down, which means that we are still continuing to see good strength in second and mid-cap stocks.
Yeah, Santo, I mean, if you look
at the
new
breed of smart investors, as I would call it.
If you look at the Nifty mid-cap, is clearly, at the sort of point of relatively outperforming. It's down only 0.2%. And I think if the small cap index can come up in your screen is down only 0.1%. So clearly that is why you're seeing that the breadth of the market is still quite bullish and quite strong. Overall, if you look at the names, clearly tech names are taking the beating. Infosys again down 1%. This is probably now what 7 to 8% cut in shares of Infosys this week alone. It's been a very, very bad week as far as tech stocks are concerned, and that is very natural given the sort of fears that are emerging now over a global slowdown and a recession in the US. Banking names also taking a hit at this point of time. Icici Bank down 0.4, SBI, IndusInd down about 0.3 to 0.5% at this point of time. So clearly a weak start, and it will be interesting to see whether we recover intraday, because previously we did. Even after falling almost 300 points intraday, we did recover during the session. So it will be very interesting to see if we see similar sort of recovery today.
But yesterday's session was slightly different. If you see
yes.
the big
yesterday
sell-off
we actually
towards the end.
ended up ending at near the day's low. We started off good, but we ended up near the day's low. And I think probably the weekly expiry had some bit of role to play there. But today, because there is no expiry, today is a proper normal session. You could really get a very good indication as to how the market is really, what the psyche of the market is at this point of time.
The last stock on a watch list this morning is Patanjali Foods. Now, good rally here again, CJ. Hard to make a case, a bearish case for that, but I'll still try and make an effort here at this point in time.
Please go ahead,
now,
Santo.
Many brokerages have come out with reports, and one of the risks that they have highlighted is the company is heavily banking on synergies with Patanjali Ayurveda. So that is also one of the big triggers in the re-rating, using the distribution network of Patanjali Ayurveda. Now, if those synergies don't play out well enough, then probably you could that could be a dampener for Patanjali Foods. But that apart, the biggest worry at this point in time is that edible oil prices have been quite volatile over the last few months. So that is something that could hurt sentiment as well as the financials of Patanjali Foods. And again, this is also partly brought about the fact that many nations which export raw materials for edible oil, they are looking at their interest first, which is only to natural. And we already saw that once when Indonesia curbed the exports of palm oil. Now, if that happens again, that's going to be another big negative. So remember, the macro environment right now, while it's much better than what it was till some months back, we're still not really out of the woods. So that's something that would keep me a little cautious on Patanjali Foods.
Well, Santo, I think if you look at Patanjali Food, clearly it is trying to, vie for that space within the FMCG space. It is now trying to be an FMCG player, and I think that is probably why a lot of investors like the synergy that Patanjali Ayurveda and Patanjali Foods have at this point of time. They have clearly invested a lot in that food business, and hopefully going ahead, that is something that will probably bear fruit for the company. If you look at it from a short-term earnings perspective, clearly, even though edible oil prices have been volatile, I think sequentially there has been a marked decline in a lot of raw material prices for a company like Patanjali Food. And I think that is something that will start reflecting in the margins. If not in the September quarter, you could definitely expect that uptick in the December and March quarter, and that is generally the view for the entire FMCG space as well. And I don't see why Patanjali Foods should be an exception to that. Apart from that, there is of course an overhang that promoter will have to dilute a little bit more stake going ahead. But I just feel that given it's involved in the consumer space, and generally in India, demand for consumer facing companies tends to be very high compared to any other sector out there. I just feel that the market will have a decent appetite to absorb that, and I do not see too much of a dent as far as the stock price is concerned, as and when that that supply of shares comes to the market, Santo.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. It's a very rainy morning here in Mumbai with heavy rains forecast and quite a gloomy weather outside, and I think probably
on the market as well.
Yeah, bulls can relate.
I think for the bulls it's work from home today. It's the bears who are returning to office probably.
Well, do let us know what you thought about the show. Share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. Till then, hopefully have a decent trading day.